Hi, everybody. Good afternoon. Welcome back to Journal House. The sun is shining here in Davos. We have a doorway open just to keep the temperature in here down a little bit. We're going to be talking about a new tech playbook now, and I'm delighted to have three very, very qualified people to talk about this here on this panel with me, starting with Sheikh Ali Al-Walid Al-Thani, who is the CEO of Invest Qatar, Raj Ganguly, who is the co-founder and co-CEO of B Capital, all the way from the West Coast, Trevor Thompson, Global Managing Director from Scale AI, and I'm Willem Marks, the host at The Trust, part of the Wall Street Journal. Thank you all so much for being here. Sheikh Ali, I want to start with you. You work in a country that has sought to diversify its economy, and I wanted to ask you about how you think about prioritizing sectors when you go through that process, when you're trying to build all sorts of different things at once. How do you rank your preferences, your priorities as you do that?
Well, thank you all for being here. Happy to be at the Journal House. I think this is my third participation here. Actually, this year we're big competitors, right?
Just around
across
the
the
corner.
street.
Yeah.
So everybody is welcome to visit our pavilion. And to,
Short walk away.
so this is my pitch to kind of grab the crowd from here. But I think to your question, Qatar, set out back in 2008 with the national vision. And that had a mission statement, which is to transition Qatar to what we call a knowledge-based economy. I think to summarize, and what do we really mean by that, is that resources or natural resources has powered our growth in the last few decades. The national vision, the knowledge-based economy, is really that human capital, aside from our natural resources, should be the powering driver for our economic development. And so that's really what we speak about when we say diversification. Now, in diversification in terms of the share of GDP, today 65% of our GDP is non-hydrocarbon. And I think going to the future, even with the expansion and natural gas output, we will maintain that share. We're looking at momentum in terms of GDP growth. The non-hydrocarbon sector has far outpaced growth in the hydrocarbon sector. And I think to make the bullish case for Qatar, there's three kind of key trends that will drive future growth. One is energy. And I think when you're looking at the build-out of AI compute, global demand, which is kind of projected to be between 60 to 70 gigawatts of AI compute capacity that's needed in the next decade. With our energy competitiveness, the sustainability profile of our base load, we're building that out. It is the gold rush today, but I guess the next step is how can you utilize that compute capacity to grow your own businesses? How can you utilize the GPU as a service? And that's how energy actually kind of impacts diversification in a way. And so energy competitiveness will still remain part of our value proposition going to the future. The second is around human capital and the access and ability to attract talent. Qatar traditionally has been a stepping stone for talent in the wider region, South Asia, moving to Qatar and then transitioning to Europe and the US. Today, it is an end destination in itself. And we're rolling out new programs around permanent residency that basically, we want people to see Qatar as a home, to live here, to bring their families, and to grow their businesses. With tightening immigration policies globally, there's a massive talent dividend that I think we're going to gain. And thirdly is availability of capital. And that as well will continue powering our growth into the future. Now, in growing new sectors, sometimes, the end destination is not clear. You have a mission statement. How are you going to get there? And usually that's a factor of a number of different circumstances along the way. And we see sectors sometimes grow where they're organically competitive. But sometimes, with the ability to attract and retain and develop domestic human capital, new sectors emerge. And so what we're looking at is where are the signals, how can we invest in them, how can we facilitate that growth.
Raj, I'm hesitant to call tech a new sector, but it's certainly newer than energy in some ways. And I wonder, when you, from the perspective of a global investor, look around the world at places where, to Sheikh Ali's point about talent, you can see opportunity for you deploying capital. How do you think about not finding places that are just low-price talent, low-cost talent hubs, but are instead really kind of long-term tech clusters, which is in the title of this panel? The concept of clustering is something that I think is quite new to people. We all understand the benefits of having lots of smart people in the same place. Cue conversations about Davos. But what do you think about when you're trying to make that distinction?
Yeah. Thanks for the question. Thanks for having me. I think it's such an interesting study to really know what drives these. There was a period in 2020 in the U.S. where everyone said Miami is the future innovation hub of the U.S., and within 3 years that kind of died out. There was a lot of talent in Miami. There was a lot of capital. There was a lot of support from the government, and it didn't work out. And so what is it that drives Silicon Valley, and how can other places learn from that? Silicon Valley is unique. It's incredibly resilient. I think I wrote an article maybe in 2017, 2018, saying Silicon Valley is decreasing in importance, and then generative AI came about, and it is, again, the capital of technology in the world. There's 2 AI superpowers, and we could say the US is one. It's really Silicon Valley that's one. But what makes Silicon Valley unique is that not only have we had the human capital in terms of the entrepreneurs, but we've had the engineering talent, we've had the capital. It's a great market in terms of liquidity, the US. So when we look outside of the US, we tend to be very selective, because while we believe innovation is global, it's a very high bar to invest outside of the US. So Sheikh Ali's been a great friend, and we've opened in Doha and in Qatar, and it's because we largely believe that in addition to places like Bangalore, where we invest, and in other places in Asia, what we think Qatar is in the very early stages of doing is not just having capital, but it's really about human capital. To your point, it's ultimately, why has it been such a resilient market? It's because Silicon Valley has been a magnet for global talent. And I hope it continues to be a magnet for global talent. There's some questions about whether we can sustain the kind of attraction that we've had for talent. But what we're seeing is great talent now is thinking both about building global companies from wherever they are. You can build global companies from places like Bangalore. And they're also thinking about outside of Silicon Valley, where else can we build global companies from? And our belief is you're going to see global companies being built not only in Silicon Valley, which will remain a really big place, but that you're going to see global companies built from places like Doha because of the human capital, the financial capital, and it's the predictability of markets. We don't need markets to be perfect, but we need governments and markets to be predictable, and we need access to liquidity. I think there's countries where venture capitalists have gotten very excited about, poured billions of dollars into it, and then there was no returns. And I've met with those governments, and they've said, well, we need you to put in more money. And our point is always, we need to get our money out. Venture capital is a business where we put in money, we have to return it to our investors, and they give us more money. And over the last 4 years, that pact has been broken. There hasn't been enough liquidity. And in 2026, we're all very focused on making sure that we as venture capitalists are returning the money to the ultimate investors who gave us that money. And we're very focused on that when we're investing outside of the US and in the US.
Trevor, let me bring you in here. When we look around the world at some of the extraordinary growth stories in the AI space in particular, within tech, it's not just building national strategies necessarily that encourage the growth and expansion of new models or building more data centers. I wonder, from your perspective, what role does human capital play in making decisions about where it makes sense to spend time and resources?
This is going to turn into a Qatari hype fest, I'm afraid.
No, I mean, feel free to criticize.
Well, So we partner closely with Qatar, and I think they're doing a lot of things right. And I'll just say, this idea of sovereignty is a theme that we're all hearing over and over this week, and historically that's been really dominant. Talking about infrastructure, compute. Let's get compute sovereignty, and the way we think about this is, I think, a little bit broader. So we think about data sovereignty, compute, algorithms, governance, and an ecosystem. And an ecosystem play, I think, is something that Qatar has been ahead of and has been a leader on. This idea that there is autonomy and there's ownership in having an ecosystem of talent that can build these things, understands how to use these systems, understands how to evolve with the systems. And so a big part of our partnership in Qatar has been, hey, it's great, we're going to build 50 use cases across the government over a 5-year period, but also we want you to upskill 20,000 people in the government and in students and youth and et cetera. And not just that, but bring people here. Let's bring the Silicon Valley culture to Doha. And we've done that. We've got about 60 folks there. And I think, and that's growing. That's not easy, right? Silicon Valley culture is manic and unrealistic and very ambitious and very fast. And governments of all shapes and sizes are not that way. And so it requires some patience, and we see that in other markets as well, that there's so much value in sort of taking this culture, bringing it there. And I'll say one thing on the human capital that is, I think, unique to the Middle East is there's a bit of a renaissance happening. Things are changing very rapidly. And we see a lot of folks that maybe grew up in Jordan and went to school at Stanford and they work at Stripe. And there's a real appeal to them to have companies, really cutting-edge technology companies, particularly in AI, that are in the region, and they get to go back and really drive impact there. And it's something that it's a huge boon for us in terms of recruiting.
Sheikh Ali, I don't think it's a secret to anyone in this room that your country has a significant amount of financial firepower. We've talked about capital, financial capital, human capital, energy, 3 propositions in Qatar that make sense for people looking at investment opportunities there. How do you deploy that substantial firepower in such a way that you encourage and crowd in private investment, but that you don't distort marketplaces?
Definitely, I think that's a great question. And there is a primary calculus around what's the best bang for our buck, right? Especially when it comes to public spending. And there's various different programs, whether it's R&D grants, incentives. We at Invest Qatar manage around $1 billion in incentives that we deploy to projects in various different sectors. And as well, what you're trying to do is to make it competitive. So you're trying to front load it in a way, trying to be more CapEx heavy than OpEx heavy in any kind of support, and make it competitive over the long term. And usually that's kind of a bet on the ecosystem. And a subsidy is good until it runs out. And so we want to say, look, this is a bet on the kind of whole of government approach, on academia, on private sector, and how are we going to grow sectors where there isn't any activities. When it comes to equity, I think it's really important to be non-competitive. A government can run a restaurant at a loss forever.
Yeah, the food will be good.
But if you're looking at building new sectors, maybe higher risk, where the private sector either does not have the capital or the risk appetite to deploy there, that's where public sector equity funds can play a role. Now, Raj as well, knows pretty well our fund of funds program, where it's not really just the Qatar market. Where we say, look, we're going to invest in your venture funds to deploy across the Middle East, because the opportunity set is much wider across the region. And Qatar does not exist in a vacuum, right? If you look at small countries that are successful, Singapore, Raj is very familiar with that, Ireland, they're tied to larger market ecosystems, ASEAN, the European Union, and so on. And Qatar's bet is not really just on ourselves. For us, our bet is on the entire region. And our growth is going to be basically contingent on the growth of our nexus markets.
Raj, you and I had a chat a couple of weeks ago across quite a few time zones, I think it was, back then, and it's nice to be in the room with you now. And I remember you talking about this kind of idea that when you're looking to expand internationally, there are some really important things that you look at to make your life easier. And one of them was, I think you used the phrase kind of anchor customers. Can you just explain to people in the room what you meant by that and how that factors into your decision making?
So for our portfolio companies, I think increasingly, as they're thinking about how do they expand, it used to be you would go and set up an office in Europe and you'd build a sales team and you would hopefully get some customers. And more, what we counsel our companies is that go to where the customers are and let the customers lead you to where you should go. A lot of our companies, the expansion is led by large U.S. enterprise customers who will bring them with them to other markets. And the reason that anchor customer has been so important for a lot of our companies is the U.S. continues to be an incredibly resilient market. We don't need to go into all the reasons why, but it is mainly driven by human capital. I also believe that it's a very predictable market with rule of law. I know that there's a lot of talk here at Davos about that, but those things have driven the U.S. market. The U.S. is still just an incredible market for our companies to operate in, so the bar is high in terms of going to another market. And when you have a big customer who says, yes, come to this market and I will guarantee you a certain amount of business, it makes a huge difference. And one thing we've been doing with Qatar beyond just investment is how can we help our companies really use Qatar as a springboard for the wider region. And I think that's what makes it unique. Just the fact that Sheikh Ali said it's about more than Qatar, it's about the region. If we were told that we had to just invest in Qatar, we couldn't do it. Because as much as we love it, and Doha is a great place, and I love the restaurants, it's not a big enough market. We're co-headquartered in Singapore. We've worked with the Singapore government for over 15 years. They've always taken a view that Singapore should be a place where you can do business across the region, and it's a very vibrant region with India, Indonesia, Malaysia, all the way to China. Doha has the same opportunity. It's an incredibly vibrant region, and I think it's a place which has been very welcoming to our companies in saying that you don't have to just do business in Qatar, but we'll help you get your first customer, and if we can get you a customer in Qatar, we hope that you'll set up a regional office here.
Trevor, I want to come back to you and talk about AI specifically again. When you're kind of thinking, whether you're a company or a government, about building out an AI strategy that is durable, adaptable, resilient, what's the calculus for you, and what's your advice for folks in the room about the balance between something like national data and infrastructure itself? Like, how important are those two relevant to one another?
I think they can be decoupled. I don't think they can be decoupled successfully. I think they have to go together. And I think we've seen, fortunately, over the past few years, a lot of really ambitious plays here. Most of them have been on the infrastructure side. And there are a couple examples of maybe very large investments on the infrastructure side that now you're a bit behind on things like data and how are we going to use these and what's going to be the governance for the compute applications, et cetera. And so I think they really are hand in hand. I do think as a data company, we might be a bit biased, but there is a massive underinvestment in data. And without your own it is the most national asset you can have, right? Is organized, digitized data that is, ready for models. And not just, for applications today, but it's something that if you do it right from the beginning, it allows you to scale as this technology changes faster than any of us can really even fathom. And so I think that investment in data is quite important. And another element of that I'll say quite practically is that the theoretical, the idea of sort of academically planning how you might do this doesn't really work. We haven't seen it work. The plans are great until you get and actually see who owns the data, what are the personalities that you're going to have to deal with. And once you actually start applying this to applications, you learn a whole lot about how ready the data actually is within different ministries, different departments, within federal, state, et cetera. And so my advice is always think hard about the data, have the conversation, and then start using it and start applying to the things that you're most excited about. And I think that's going to teach you a lot about your readiness.
Sheikh Ali, you were talking about kind of the incentive programs you have and fund of funds. And I wonder, for a government-backed platform like yours, where do you go looking for approaches to accelerate commercialization by combining the academic background, the legacy industries, as well as the startups. How do you bring those together in a way that's cohesive and coherent and successful?
Yeah. I think that comes down to, when you're talking about cluster development, that's really this, kind of trifecta of government, academia, and the private sector. And I think when they work well together, that's where you see cluster development. We've recently updated our kind of mandate and strategy to include cluster development as kind of a core area where Invest Qatar will play a role. And we've specifically chosen certain clusters where we see growth potential. One, that there has been quite a lot of movement in recently is around semiconductor design. We've talked to universities, students. Many of them, did their PhD programs in Qatar. We made massive investments in the educational infrastructure, but then they end up working in Apple and Google. And so, how can I create the right opportunities for them here in Qatar and to retain them? And so then try to understand their challenges. Try to look at startups and what kind of issues they face, whether it's market access, access to manufacturing, the R&D ecosystem, and so on. How can we enable them? That led to a massive partnership that we've announced recently with IMEC, which gives us that capability set. And we continue on growing that. Now, foreign direct investment does play a role. Having growth in the academic programs, that also supports their long-term sustainability to have a presence in Qatar. They need the talent throughput. They need the pipeline that they will depend on. They can always attract talent, and the pull factors of that in Qatar has grown. When you look at the educational ecosystem, healthcare, infrastructure, connectivity, safety. But we need to develop as well the domestic throughput and to have also their input from the private sector to the universities and what kind of caliber of talent that is well equipped for them today. And so we facilitate that. We facilitate that interaction. We're the government in this equation.
Yeah.
But I think we can play a massive role in terms of helping grow these clusters.
Raj, when you take your laser-focused eye and you look around the world, and I know you're looking at North Macedonia or India as well as places like Qatar, and you're thinking about what makes sense here. If I'm looking for high-value tech investment, I'm looking for long-term sustainable profits, I'm seeing capital appreciation in these places. We heard a little bit about the challenges with immigration globally. So how do talent visas play into that equation for you guys? How does the research funding we're hearing a little bit about? Give me a sense as to what you're looking at in terms of all of these factors that make somewhere attractive.
So I think, it makes such a difference to have governments that are supportive of innovation, but I just want to give the caveat. It's great to have supportive governments. There are countries that have succeeded with governments that have been schizophrenic.
Okay.
So
do you want to name names?
Yeah, I'm definitely not going to name names. I know they have big delegations here in Davos, and I don't want to offend anyone here, including countries that maybe I was born in, which have some
Everyone
great
jumps
policy.
on Google at this point.
Which have some great policy today. Ultimately, it comes down to human capital. It's incredible that when you go to a place like Qatar that I could just WhatsApp Sheikh Ali and meet with him and tell him what I need, and suddenly the government moves and gets things done. That's great. It makes things a little bit better. Ultimately, everything that we do is driven by human capital. And the fact that the U.S. runs the deficit that it runs is based on one thing. It's a belief in the innovation and the future wealth of the U.S., and that's driven by talent and human capital. We have the deepest human capital in the world in the U.S. And if we don't have it today, the belief is that the U.S. will attract it tomorrow. I hope that belief and that promise that the U.S. was founded on always stays true. But I do think that the world is flattening out, and the world is becoming a place where talent will go to other places and talent will stay where it is because they will build global companies from wherever they are. So I spent a little bit of time in South India and Chennai. It's not Bangalore, but it has incredible talent. And you're seeing talent in Chennai saying, hey, we can build global companies from Chennai. But you're also seeing talent in India saying that there's huge access to profit pools in the Middle East. There's access to capital, and there's friendly governments. And frankly, I know this sounds small, but you can get really good Indian food.
Yep.
Indian
important.
groceries, and it's just the whole GCC has embraced entrepreneurs from diverse backgrounds. And that's, if you go to Sunnyvale in the US, in the heart of Silicon Valley, I think there's better Indian food or better South Indian food in Sunnyvale than, frankly, I think there are in parts of Chennai. And that's what's made the US so great. And I think others who want to build these clusters should focus on human capital above all else.
My in-laws are in Sunnyvale. I'm from London, so I might disagree as to which is better, but I appreciate that entirely. One thing I'd ask, though, Trevor, of you, we're talking about, and we're re-acknowledging your bias around data, just so that everyone's clear on this. But when folks are trying within a government to build, over the last few years, a data-first AI strategy, what makes it work? And if you're willing to name names, where is it not working?
Boy, we do love data. I think the constraints here are the most common problems. One is convoluted ownership of data and a lot of siloing with leaders, which is a natural human response. You're not sure, you don't want to risk it, you don't quite see the value. And so if you have a use case, one example might be autonomous driving within a city, and you want to fast track it by looking at data. You've got maybe tourism has elements of that. Municipalities own pieces of that data. Interior Ministry owns pieces of that data. So that is really challenging. Is building some top-down trust that gets everybody to buy in and sort of align around a mission, and then ensure that everybody benefits from that. So that's one. I think the second is. It's just knowledge about AI. It's comfortability around this stuff. And so, one of the, I think, problems, and we've learned a lot of lessons, as have many companies building applications. This stuff's hard, and just because you have the right solution doesn't mean that you're going to lead to some level of impact. And our belief, very firmly, is that if you don't put very high quality human capital with technical skills on the ground in the place where you want this stuff implemented, it will not work. It just doesn't. And we've tried it. It hasn't worked. It doesn't even work in enterprises in many cases. And so the importance of building alongside and understanding, how you're going to build. Now, how do you build successfully? I think with software, you can build software out of Redmond, Washington, and sell it in, Dubai, and it works great. I think with a lot of these AI implementations, you need to align on a North Star, and then you have to accept that it's going to be iterative. It's going to be iterative because you'll hit walls with data access, with skill sets within that group. You might have one intent of where the big unblock is, and then once you unblock that, you realize there's something over the hill. And so the idea that you're marching towards this goal, both sides are on board with kind of iterations, is I think how we're seeing the fastest way to get to impact, and impact that's repeatable and reliable and is actually in production and can get us out of this, I think, pilot purgatory that we've been in for years.
Pilot purgatory, that's good, I like it. Sheikh Ali, I think we've got time for one more question. I want to ask you this. You're trying to build these different sectors. I want to stick with tech because that's what this panel is about. As you're building out your tech ecosystem in Qatar or in anywhere in the world, when do you know that you've gone to a place where that new ecosystem is self-sustaining and no longer reliant on public funding support?
Yep. So,
and when's that going to be for you guys, do you think?
Well, we're aiming for 2030, and I think we're on track. Now, it's not just funding. Public sector support has many various aspects to it. Facilitation, business development, as well as policies, legislation, and as well as support programs such as funding. Now, I guess the key kind of indicators to see private capital deployment when it comes to support. And I think the moment when we see private capital eclipse public funding, right, that's where we see kind of we've met our target. I think also on human capital, which is very important, is that many times, any business, right? It's an operating model, but then you have human beings in the middle of it. And sometimes, when you're talking about relocating to Qatar, you're really not negotiating with the investor. You're negotiating with his wife, or his kids. And so what matters there? It's schools, hospitals, even how do I bring my pets?
Yeah, parks,
Yeah, so
everything.
Things that may appear small, but to be honest, sometimes in such a big decisions, they are big. And for us, I mean, we pay quite close we look at this very closely. And I guess, I mean, initially, I mean, having that support is really important. At some stage, you reach a certain critical mass. And like Raj, you won't need to WhatsApp me to get anything done. And I guess that's where we want to reach when it comes to our policies and legislations.
Well, I want to thank the audience for being such a rapt pair of attention amongst all of them. Thank you so much. And also Sheikh Ali, Raj, and Trevor, really appreciate your time. Thank you so much.